Good morning, traders. It is 8:01 a.m. Chicago time on Tuesday, the 7th of July, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Rundown of the news, as usual. Not much on deck. European equity markets opened slightly higher following losses on Monday. Yesterday, the focus has been the Eurogroup meeting. Markets later pair some gains and trading's mixed. The Shanghai Composite resumed its steady decline after yesterday's late session bounce, though participation of traded shares continues to decline. Gold is lower, oil is higher, the U.S. dollar is higher versus the pound, yen, and euro. The main news item I saw regarding Greece is Catamarini sources say that the EU is looking at three options for Greece: a new program, a parallel currency, a controlled default, and Grexit. Grexit's being openly discussed, and several EU members seem to prefer Grexit. Catamarini sources also say 16 of the other 18 countries in the Eurozone are in favor of letting Greece leave the Eurozone. We'll have to weigh up the cost of any agreement to keep Athens in the single currency. Other than that, just now, we have our May trade balance came in at negative 41.9 billion versus negative 42.7 billion, so slightly better. There's a lot of chatter on the news feed that keeps coming across, a lot of commentary, and we see movement as a result in the European products. Looking ahead today, we have IBD tip economic optimism at 9 Central. It's a half hour after the open. Looking for 48.8. And also at 9 Central, we're looking for U.S. JOLTS job openings, looking for 5,300 or 5.3 million, I believe. And then other than that, let's see, 8 o'clock, Juncker speaking currently at an EU summit in Strasbourg. And then the big piece of news today is the Euro Summit meeting, which starts at 11 Central, 12 Eastern. Let's switch gears real quick to what we have for our technical picture. So we've been battling this same area, and it's kind of a scratch record kind of thing where we're talking about the same thing consistently, but the market hasn't really moved out of its ranges. It's been trading some pretty good, it's had some pretty good range days. You can see this is the outside of the first standard deviation, and you can see over the last few days we've had pretty good range on the day. This chart only shows the day session or the pit session, and it does not include the overnight session, and it's for 1 day per bar. So with that being said, since February 13th, we've been in this range. So the general rotations have been back and forth inside of this range. We have a gap zone, which I'll note in another chart. And then since the 28th, we've been stuck in this range here, and that's going to be an important microcomposite that we'll discuss in a second. That's the big picture. The shorter term picture, here it is. This is the 28th right here. We had a big range day down, a clear trend day. The next day we were in range. We tested the low, if you recall, last Tuesday. I talked about this low being weak with the point of control at the low. We're looking for a lower low. We got that. And then also the hypo one for Tuesday was that we were likely to stay inside the range. We got that. We had a trade that was completely inside the range. Wednesday we opened outside of Tuesday's range on the upside. We're looking for a push into the range down into the 66 area, and then we're looking for a bounce up. That didn't happen. The market ended up pushing all the way down through, and it carried over into the value high of the prior day. The prior day is balanced. So that was classic um, uh, profiling auction theory type stuff. The next day, again, we opened auction out of range. This was NFP day, open auction out of range, and then the market dug really deep into the prior day's range through the value low and basically put in a weak low and was just sitting there um, for most of the session. It was not a clean trade. That was on Thursday. Friday's not in these charts since it's a half day. Not interested in it. Let's step back for a little bit and look at the trade on a short-term range. Open auction out of range, so we're out of range of the prior day. The primary hypo yesterday was for responsive buying up to the 62.25 area. If we get into the 62.25 area, looking for a test of that 67 point of control right there, and then the key area to test was 69 up here. 69 is the MC point of control, or the composite point of control. Why is that important? I'll show you in a second. So if we step back and we look at what the microcomposite has been up till yesterday, let's grab this profile, pull it back. You can see the 69.5 based on the fact that this area has done nothing but balance. So the pattern for this has been just, this is basically it right here. So complete balance. A profile, I've shown this profile a couple of times and have posted it and annotated it. We have three distinct balance areas. This has filled in a little bit, and we've been stuck in this middle range. We're looking for the 69, this 69.50. You can see that black line. This is the microcomposite point of control. It's the most valuable price in the area, or the most traded price in the area. And yesterday came right up to it and right here and tested it before falling off. So yesterday, responsive buying, hypo one complete at 69.50, went to 70.50, so pushed by 4 ticks. Then it fell back out of the range, traded the bottom of the range, and you notice the point of control is right underneath the range low of Thursday. Then it fell off completely, and then we rallied on the close. That was a pretty decent sized rally on the close with a little bit of delta behind it. You can see the delta is moving up with price, not as strong as price, but still the buyers were lifting pretty good. Now, if we move this MC forward, look at what happens to the point of control. The point of control shifted from here down to here. And what we've done, what we did yesterday is by moving the point of control lower for this balance zone, we've essentially established a better base to go higher from. So my opinion overall is that this is likely to start moving towards the gap zone. There's a gap here that we left behind. This is the low of the 28th, and this is the high of the 29th. The gap zone is 83.50 to 86.50. It's actually 83.25 to 86.25, something like that. This is what's likely to be tested next, and I expect this to be the target once we get up there. This is a composite high volume node. It is a naked point of control, and it brings us back into the prior balance before this whole breakdown in Greece occurred. Okay, so for today, what is the plan? First, let's look at the overnight session right here. Okay, my notes from earlier as I was preparing, at that point the low was right here. We have a double distribution profile on the overnight session. You can see the two distributions. The market has moved to the lower distribution, most recently and has left a weak low, which is now broken. So my expectation is, unfortunately, it already broke here. I was looking for that as a trading opportunity right here. My expectation was for responsive selling back into the 62 to test the yesterday's point of control. If yesterday's point of control does not cause this, to hold. So if I shift this chart over and draw on it, so the expectation was to come in on the open, move down and through, chop, 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 make an attempt higher, fail, and then basically hold this area. We're likely to test the 58, the new MC point of control, the 58 that we shifted that I just showed you. We're likely to test it from above to establish a base. There's the 58 right here. Remember, this moved from, the point of control moved from here to here. So I'm looking for this to respond down to 62, chop, 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 and then I'm looking for it to move lower and test the 58. That would be hypo 1. Hypo 2 is to pull back to the point of control, chop around, make an attempt, and push out. If it pushes out, then I'm looking for 2077 as the goal, as the first target. That would put us past this LVN zone right here. And then I would expect it to test this 2077, pull back to the LVN zone from the 29th, so around 72.50, 73, and then I'm looking for it to rotate up towards the 83 quarter. That's hypo 2. Okay, so that's the plan for today. Looking at the bigger picture stuff, real quick, when we look at the monthly, a couple things to note here on the monthly that are important. The monthly since February, so we look at February, February low down here, March low down here, April down here, May. But then when you look at June, June is the first month we put in, we stop one time framing on a monthly basis. June is the first month that puts in a lower high. There's the high of May, there's the high of June, and a lower low. There's May, there's June, and we're stuck here on the low end. This is showing weakness here. The market's likely to, I still think there's a pretty decent chance to get back to 2011.50. This yellow doesn't show up very well on here, but 2011.50 is a very, very big area that has yet to be tested from earlier this year, from before we got into the balance of February. And that hasn't happened yet. My expectation is that it's likely to try to work its way up here. Notice the point of control for June and for May is in the same spot, and we're trading below them. Huge area right here, the 2102, very, very big area. This is expected resistance in the big picture on a swing basis, and then the expectation is for it to drift down and start moving towards 2011.50 if we don't get some fantastic news to push us to new highs. I think the market's likely to struggle to make new highs. That's it. I did want to talk about the Bund 10-year spread. This is not just for spread traders, but it's to look at the relationship between what's happening in the European markets versus the U.S. Treasury markets and interest rates. But I'm over my time. I want to remind you that tomorrow we have our trade wisdom session at the end of the Trader Bite. You might want to tune in for that. It's in the last 5 minutes from about 9:15 Eastern till 9:20 or so. And that's it. Good luck today. Watch your risk and just don't get stubborn with news. Good luck. Take care.